Hello, everybody. To everybody watching, how's it going today? Boy, all right. A little bit late. Well, I guess don't want to call it late, but where is this bad boy? Okay, let's jump right into things here. Let's look at the overnight. So, just with the rundown here for the Nasdaq, we had the daily pullback, bounced off of the 50-day. Set a daily high of daily high or low with the break of this candle. Got to around the golden pocket or the other side of the 12 moving average, and then we kind of came back down, set the daily lower high on the break of this essentially double bottom, and then we break bear with no follow through on Nasdaq, but not on SPY, and then we get a bounce. And on this day, pre-market. So one of the notes here, it says, expect sweeps on opens or during news events like FOMC. And on Friday, there was that level that was set, that was starting to get broken. It was a pre-market low. The first 5 minutes shot straight under the pre-market low, exactly what you want to see from a bear. 5 minute close, no wick at all. And the very next candle shot straight back up, back over, and then just went up for the rest of the day. So, if there's that daily level line in the sand and you see that bear break with no follow through, even if it is like a lot of the time it's exactly what you want to see too, which is the hard part, because the market will show you what is perceived as a strong signal, because they know that people react on those. They want as many people getting tricked as possible. And the best way to do that is to um, lure them in and then drop it's like luring somebody into the forest, having them step right over the spot where there's a bunch of like leaves, and then right into the air. So it's exactly what happened. Had a big run up. There was a little bit of an hourly high or low, no follow through, and then the market closed. So what does that leave us for today? The very intriguing question. We're not gapping up, we're not gapping down. We are kind of right where we closed, and I think that the line in the sand here is going to be this little level right here for the most part. The reason I say that is because you have this big move up, you have the higher low, trying to set a bull flag here, no follow through. You drop down a little bit, and then I hate how this kind of. Oh, again, I'm not sharing my goddamn screen. I am so bad at this. Holy crap. So bad at this. Anyways. um so yeah, sorry about that. Jesus. So big run up, higher lows try to be set. Now once again, if you're looking at the futures, you have this little 4 hour bull flag that gets higher high with no follow through here, which again is a little bit of a red flag. We can look at SPY and it looks very similar. So a lot of everything looks somewhat correlated. And we'll take a look at the previous day's range with SPY. As you can see, SPY did not break the low here. And I was watching Dan the Chart Man, and again, talking about how, QQQ broke, but SPY didn't break. That's intriguing. And it's definitely like, on point. The only thing that confuses me sometimes is that, like, I guess you have to see the fake out. It's like, okay, there's the Brit Bear break, there's the fake out. Oh, and look at and SPY hasn't even broken yet. So that's like kind of like a column for the bulls of the maybe there might be a fake out there. Besides the fact that there's also it's the daily uptrend is still in play, and it's not like a daily downtrend and they're trying to break support. But yeah, we're in yesterday's range, Friday's range here. Again, you have this lower high, looking for the higher low here on SPY. It's getting a little bit EQy. I think this level on SPY is definitely noteworthy right here. I mean, I guess it could be a little bit more fixed. I guess I can do this. And you get this teetering level here, you get your bear break, you get your back test. So this level is still important. Bulls need to get over that level to feel really confident. But as we talked about, um, the pre-market high is the highest is an important level today, and the low of this move here is an important level for intraday traders, in my opinion, because this was the higher low, higher high set, no follow through. This was the low, we closed. Pre-market was able to push it back over this level right here. And now we're sort of in a little bit of price discovery from a pre-market standpoint, but this 67117 is a big level here. And if it breaks that, then once again, we're probably looking down to the lows here. Um, you could also make a case that, obviously, I hate having too many levels, but you have to add these things. The pre-market close, it's like right around there. So it's really this zone. But I hate putting a zone there because then sometimes I'll get confused, be like, oh, maybe, looking long there. Just got to be really precise with not tricking myself. So we'll do the same thing for QQQ to get a good idea of what we're looking for today. I'm going to try to. I don't want to be as much day tradey as I was last week. It's just being in a daily uptrend still. I didn't want to be. You know, I didn't like the longs, and I I really wasn't comfortable with like long term shorts. So this one broke bear, no follow through. So I'm gonna get rid of that level now. I think it still plays a role, but it's just a level of it was just a level, and I just don't want to like again get too sucked in on just a level. Prior day close. Gonna try to stay off the 5 minute time frame as much too, unless I'm executing. And one thing I've realized in my review over the week was that I think I'm expecting too big of moves. Like I don't want to sell half, but I'm expecting too big of moves, and I think that that's becoming somewhat of a problem. I keep hearing this thing in my head from Tom Hogarth that says, all those times where you sell right before it gets to your target, those things add up. That's true, but also it adds up when it doesn't get to the target and then it completely rears back. That's like five trades of barely making it versus completely getting stopped out. So, if I'm not leaving a runner, I think it's, something to be looked into. Because I do think that I'm looking for too big of a moves. Like if I'm looking for the weekly lower high, and I'm getting in on like let's say the 4 hour or the 1 hour, like it needs to be a 4 hour, 1 hour trade. It can't be the weekly lower high. It could be like I could get in, sell half, and try to see it play out, but that it needs to be managed. So this is a big level here. And I mean, again, and you can make a case that this is starting to look like another Head and Shoulders here. Bounce off of that and then come back down here, and then it's Bears Parade right there. It's interesting. Let's see what Dow did. Dow bounced off of this level here. What is this level? This level is just a prior level from here, which is the um, one of the resistance, the highest close after a significant pullback. So here's your close. That's the highest the price was being pushed up by the wick. This is a significant pullback. Um, One, it breaks the EMA, and then two, it broke the lows. So that's significant enough for me. We come back. It's resistance still. You get over it. You back test it. You get a bear break with no follow through into a big move up, and now we're back here again. So you would expect bulls to potentially, show up here again. But it's an interesting spot. It's an interesting spot. With that being said, on this big move up, we did get a daily higher low, but it pulled back significantly. So we are looking for a daily lower high, most likely scenario, unless we see increased bull volume. XLF finally pulling back, bounce right off of this level here to the T. Again, this is where I've been trying to do the most work with my TA, which is okay. I have let's say I'm looking for this move here. I'm looking for a move inside of this range here. I'm on the daily, so I look at the hourly here, and I'm looking for some sort of daily pullback, right? So what am I looking for? I'm looking for hourly RSI being extended. Okay, check. I'm looking for some sort of divergence. Okay, not there. I'm looking for some sort of hourly pattern, um, or changing character, right? So you get like this little tightening range here. It starts to look like a little bit of a descending wedge or something, um, which is bullish, and then it breaks down. So that becomes the hard part because hey, oh wow, it hit my level. I didn't see anything that was bearish here because sideways trading is strong. You get the bear break here, and you don't even get the back test. So I would say that we had a significant pullback here. I think anything back into this range here would be a good short. That would be my guess, but I'm not perfect. Then we have XLV. And XLV, I was trying to maybe I was overthinking this a little bit. I was thinking to myself, if it was kind of inverse, where XLV was finally giving back some, and then QQ was bouncing. So there was rotation here. So I was saying to myself, if we get hourly oversold conditions here on XLV, if that rotation keeps up, I'm going to go long on QQQ. Now, the problem was that everything started to get strong at the same time. It was this 15-minute range that like broke. Where was it on Friday? Yeah, it was just it's like tight little double bottom, lower high, higher low, and it started to break bull here. And I was like, okay, this is breaking bull. We might see a pullback on QQQ. It just didn't really happen. So everything was kind of going up the same way, and then everything kind of pulled back the same way. So the market started to actually be in tune all around, and not that the hourly oversold conditions bouncing on XLV, meaning that QQQ will go lower because the rotation is still in play, which is healthy as long as we're not seeing all sectors at the low. Seeing all sectors at the low at this point would be, I think, scary because we lost the EMA. Um, we've been battling the 50 for a while now. We're still barely in a daily uptrend. So I think if we see it now, I think that would be a very big cue. And I want to write that down. So all sectors hitting lows at same time is should be a big sign to look bearish on the rest of the week. How's that? XLY, IWM, all kind of giving back same thing, same thing. Bitcoin. Let's check out Bitcoin real fast. So Bitcoin had this daily oversold, tried to form a bottom here, got a bounce, not much follow through here, broke the lows as you see. I mean, this is always tricky, right? This is tricky. I don't care who you are. You have the bottom here, you have the bear break with no follow through, then a close, and then you have the bear break. So what's the real signal? Is the signal still now this, or is the signal now the low here? And the lower you get, the less meat on the bone. So the real issue, the real question is, or the real answer is, aggressive or conservative. Okay, if you want to be aggressive, you play the break of this candle. If you want to be conservative, you play the break of this candle. And that's the only way you can go about it. Aggressive versus conservative. It really is. And then where would you put your stop? You'd put your stop at the high of day, I guess, with a little bit of a buffer. You can't put your stop way up here. That's for goddamn sure. Even though it'd be so comfy and relaxing too. All right. Now we know where Google, we know where QQQ and SPY are. Let's try to find some relative strength, which has been hurting me actually. Um, it's actually been making my life a little bit more complicated because every time I think that I have a good correlation, the setup, the actual entry is tough. So I think the issue was that I just got a little bit too I got a little bit too eager with Google on a short. But we know that that line in the sand with SPY, Google had a huge something huge happened with Google at the end of the day. Okay, Berkshire Hathaway. Okay, gotcha. Google's strong. Google had the lower low here, gap down into just an absolute abyss. Okay, I mean the bulls should have had no business doing this. This is big money stepping in my opinion, buying it up here and now pushing it way up because again, this thing should have went right down to the gap fill. Back over EMA 12. We have resistance here at this top level here. It's on an hourly. I have it on a no. I have a daily level. Maybe I can make it an hourly level though. But it's the same thing I always do. See, this is the highest close on the daily. Got all the wicks in there before a significant pullback. Why was it significant? Because it broke the low, broke the prior higher low, and it broke the EMA. So even better, double. So that's an important level. These highs are important at this point, and we are extended on the hourly. Oh, well, look at that. So you have this hourly rejection here, which is fine. Now you have this hourly higher low scout, and you have this EMA 12 is a pretty good area here. Um, my confluence levels are either Fibonacci, RSI, moving average. Those are my three. Um, and if you add, and I guess you could say four, like POC, a prior POC, some sort of structure, and let's see if we can what we can dabble up with. So we have the higher pre-market here. So the EMA 12 doesn't really match up with anything really. Um, we have a huge gap up. I mean, we could realistically look at this as a position play. I've been trying to separate position for sniper plays. If you're looking long, you could start scaling in around the 50% retracement, maybe get another one here, and then have your step underneath the low here, the high of previous day. If you're looking long on the market, And again, that would be like a 50% retracement, depending on where it goes. The problem is that if it goes back past this level here, then you have to manage the trade a little bit better with expectation for it to not get back to the high here. But a higher low most likely scenario here. We don't really have much confluence, and honestly, the only real level here is the EMA 12 on the back test. And maybe we can get 5-minute RSI over. Okay, yeah, there we go. Okay, so we have a little bit of 5-minute RSI being oversold, which is going to get oversold at the 0.38, which is an issue because once again the EMA 12 is down here. So again, you don't have a lot of confluent. You only have one level there. If you can get 5-minute oversold and then 15-minute oversold and they get down to the golden pocket, that area is a little bit more appealing. That area would be a little bit more appealing with confluence. So Google could definitely be along here. So Google, and again, I'm already looking at day trades, which is hourly, higher, low, long, 515 RSI, EMA 12, golden pocket. So that's three things that are lined up there. That should give me the confidence to make a play if it is to turn out that way. Um, I've been interested in Meta here for potential long. It's kind of a weird play, but I'm thinking this is my thinking. My thinking is this. Yes, we're underneath all the EMAs, but we have a monthly higher low scout right off of the monthly higher low, golden pocket. We have a weekly man array that that's measured move is getting filled, that's getting completed. Okay, monthly higher low most likely scenario, daily oversold conditions. So we have three things going first already, and then you have this little bull flag here with no follow through into a bounce. Okay, we have this hourly bounce. Could look for a potential hourly high or low. That'd be somewhat aggressive. Or even better, if you're sort of looking at it from this perspective, you get this descending wedge here, right? So maybe you get like this push up, pull down, and then you have all hands on deck. So I'm looking for that. Now, obviously, the break of the high of previous day is important, but I don't like that there wasn't an hourly high or low set. So I like it better if we did come down, do this, and then do that. But if we just come straight up and hit that level, I don't think I like it. So there's a part of me that wants to go along with Meta here. And again, the a lot of the time, and we look for this in bull markets, is that if a bull flag doesn't get followed through, is it usually can mark a top on a lot of names. Definitely, if you're looking for like a monthly high or low, you get a bull flag, boom, back into it, down, monthly consolidation increases significantly. So again, I don't like the fact that these moving averages are all above it, but if you are doing a long-term trade here, It is one of those things where that's the pull back there. So again, we switch that up. There's your lower high. So we'd be looking at least 700. I'd call it 695, 700. 695, 700, which would line up right around these moving averages, which would be, if we got a lower low no follow through or bull break, it would be a 10% move. It's not too bad. All right. So it's again a lot to keep an eye on. Tesla here. I did mention that I thought that this would happen, kind of coming to fruition here. I thought that they'd want to stop people out. It was this weekly cup and handle. It's Tesla, weekly cup and handle, no follow through into a pullback. But if you look at the monthly, I mean, this is still a monthly cup and handle. This is still a monthly cup and handle. As long as it doesn't break 340, 374, it's still a monthly cup and handle. And we've been really going head to head with some of these levels here. Pull back to the top here. Now we're looking at a potential higher low off of this level and maybe some upside here. Um, Tesla doesn't look bad at all. I say that with, you know, a little bit of hesitation because we just lost the weekly. So it would have to be a really big fake out. And I tried myself looking for the fake outs a lot, and it doesn't really do me any good. This is an important level on QQQ. Sorry, on Amazon. Amazon kind of in the middle of a smush zone here. Had the bear break with no follow through. So for actually no bear break gap fill here, looking to get down to the 50. Um, but it's in a smush zone and it didn't get back above the level here. A lot of the names had a bear break with no follow through. This is a daily downtrend. Daily downtrend. Weekly consolidation. What would the bears need to do to negate this? They would have to get back over this level here, which would be the no change level, and they'd have to set a daily higher low to negate the move down. A close back above this purple range would negate this move down, though, for now. Nvidia opening right in the towards the middle of its range here again. Nvidia is interesting as it held this little level again here. Um, like this was the meat and the meat and bones, the steak and potatoes. But this is definitely a level. This is the real level here that is like the last line in the sand here. Like, but stopping out these orders here was a big move. But it just barely just saved the day. Like you could say this barely saving the day. Then we gapped up. Now we're back down here. I'm surprised it bounced. I think the only reason it bounced, if I'm being honest with you, is because the whole market bounced. I don't think that this was. I mean, I could be wrong. The volume wasn't really there. But this would have had to been just, people stepping back in and being confident in a spot where oob, I don't know how confident I would have been here to buy. Definitely since we had, oh no, it was a golden pocket play. So yeah, I guess it made sense. But again, smush zone here. Earnings coming out on Wednesday. That's a big day. That's a huge day. PLTR. So PLTR is a little bit more of what we're saying before, where it's like this was the meat and potatoes. It broke down. Gap down of I mean, this actually broke that level, which is surprising. I guess you can call it a double bottom. Came back up, got above here. I did read something interesting that was like, because I was always like, what happens if it gets back above the EMA 12? Like, what does that mean? Like, is that bearish or bullish? And what AI told me was interesting, where it's like the job of the moving average was to keep price above it, which it was doing, right? So when a price gets back above it and closes above it, yeah, it's not the best sign in the world, but it's like, okay, Bulls, what can you do now? So the fact that it was a daily lower high scout, and then the very next day we kind of struggle with it, and then this day we come back below it, that then should say to me, dang, that's all they could do was hover back over it and they get pushed down instead of like getting back over it. Nice. Let's keep on pushing. So that it's actually a sign of weakness, which is something that I wasn't thinking about before. So it's like you break a big level. Okay, cool. But now what do you do with it? It's like, here's $10,000, go invest. And then you go to the casino and you lose it on craps instead of putting it into Apple or something. Like, what are you going to do with that $10,000? Oh, you're going to spend it on drugs and hookers? Okay, great. Perfect. So the big level here is now this level here. And you can make it, I mean, look at this daily lower high, higher low. Actually, I mean, I guess you call it double, let's call it a double bottom. Daily higher low, double bottom. Daily lower high. Daily lower low. So far with no follow through. But now again, if you're a bear, you say to yourself, okay, we have the 50-day as protection, we have the EMA 12 as protection, and now we have this level here that we have taken over, and the bears might be looking to protect that level here too. And we're teetering right over this structure spot here. So there's a chance that again, man, I need to get on this earlier so I can do these a little bit more. And it looked like it came to the top of the range here. I know it didn't quite get there. What does the hourly look like? So you had the big hourly boost, was hanging on, and you could see that this level here, this little hourly level here is being broken pre-market. Bulls trying to hold this level here, which is support, and if not, now the issue I have here is that, okay, well, the pre-market throws a little wrench in. So is this going to be an hourly? Would this be an hourly higher low scout, or would this be, the bulls failing here and then going lower? So that this is when pre-market confuses me. So maybe it's best just to turn it off here and say to yourself, okay, there's your hourly higher low. Looking for the hourly higher low. Maybe if you see like a push up with a failure back down, then that's enough for you to look short for the day. So PLTR looks sort of like a short. Come on. But the problem I'm doing is, see, I'm making these plans. I'm not locking them in. I'm not making them super airtight of where my stop is, where my target is, yada yada. QQQ now did break the priority close and is up against that 670 117 level. So market is not looking great in the morning, even though technically speaking we are still in priorities range. Oh, this is SPY. I need to I hate when it does this. Huh. I need to be a little bit more airtight with my plans. That's why I like a lot of the things I say happen, but I don't execute on them properly. That's the hardest part. Microsoft here looking pretty good. Microsoft had a nice move up here. Kind of a weird type of megaphone pattern, potentially. And then Apple had nothing. Apple was like, I already did my move, so we're not doing anything during all of this. All right, let's look at quantum. QUBT bounced the most. It has earnings on Friday and is up huge, 14%. That's a nice little move, and it's in a fucking disgusting spot. I mean, I guess you did have the gap fill. Oh, they didn't even gap fill. Didn't even gap fill. I mean, it just happens to be in a spot where the Bears finally do some damn good work here. They finally get past this level here. I guess the bigger level was this was more of a gatekeeper level, I guess. Sideways here, held it because this is just an extension of this. Held it here, held it here, held it here, held it here. This is all this. So when we get back in here, try to hold the POC, the value area high, fail, try to hold the POC, successful, bounce up the value area high, back down below, breakdown. Once we lost this the POC, it was over. And now we're back up. Now we're trying to fight it now. And you do have this cross. This is going to be a tough day to trade. This name, and I think this whole sector. So I think I'm just going to stay off of that, just because I don't know what direction the Bulls and Bears want to go. Obviously, it's bullish, but there's a lot of reasons to not get too excited about the upside. All right. I didn't even check the news today. Let's take a look. Ozempic to $349 a month. Cheap IGO's comeback. Should I use a will or a trust for my state? Trump pivots tells Republicans to back release of Epstein's files. Bitcoin bear market could deepen further as liquidity worries take hold. Bets big on Boeing with 38 billion order at Dubai Air Show. Okay, so we got to check on Boeing. Americans are heating their home with Bitcoin this winter, but it doesn't make any sense. New York Fed reported met with Wall Street firms at their key lending facility. AI puts a squeeze on new grads and the colleges that promise to make them employable. Yeah. Yeah, it sucks. That fucking really sucks. Okay. So Let's take a quick look at what I say, BA. Oh, nothing. Nothing. Still in a bad spot. All right, let's see if there's anything going on here. So it looks like Nvidia is starting to pull back a little bit more. That's an ugly chart. Ugly chart. Hmm. I mean, this is a tough chart, man. Clearly the high here. So you get back in here, you hold, you break down off of that. Coming in deep there. Yeah. We know Bitcoin is sort of, we talked about Bitcoin being weak. Trying to hold this level here. I mean, this is a big level because if it doesn't hold that level, it's going down here. You can't like that daily, the back burner oversold, got a lower low. That's not a good sign. So in order for me to be bullish again, I would really need to see price get back over this moving average and back into this range here, and then at least try to get back here. But I don't want to look bear either because we're in a zone of interest and we're clearly trading sideways during it. So energy names, anything good going on here? Ugh, really don't like the way this looks. Ugh. Vistra bounced pretty big. This was another play. I mean, these plays are tough, man, because again, Vistra bounces right into this level here. So you're just looking for a back test here, not necessarily daily low or high, but maybe something on the 4-hour hourly. You could just move right straight up here. So maybe you're looking for a short here, some sort of hourly consolidation. You look at the 5-minute chart, looking for hourly consolidation. You get a back burner here, but that's when I guess you don't necessarily always want to just get in here. I guess if it's a back burner with a level, you can get right in. Back burner level, get right in. Put your stop. There's your buffer. I guess that's a play. Back burner level. If not a level, just a back burner, then you want to wait for something. But I was looking for some sort of pattern and I just couldn't find it. Even though this now looks like a rising wedge here. But usually the rising wedge doesn't have this lower low beforehand. And this had no volume on it. Yeah. I mean, that's what you don't hate. You don't hate this little double top here, but now it's kind of going down. Always so hard to get into those trades, man. MP potentially has a daily higher low being set here. It's getting beat up so much. But again, is it a monthly higher low scout? It is. Monthly higher low, weekly had a little bit of a higher low set with no follow through, which is a little bit weary. The daily did bounce. These trades rarely work out for me. Gold. Get over here. Bull break. Look with a break and retest. Lost that. So this is a nice big old daily move here. Daily higher low scout. Got a daily trend change here. Daily higher low scout. Weekly higher low is set. This could be a quick little weekly lower high being set though, but I mean that would be kind of optimistic because it is a weekly bull flag. So if it's a weekly bull flag, you'd think maybe get back up to here, reject or bull break with no follow through into monthly consolidation, but it's unlikely for this to be like a quick little weekly lower high, lower low. I don't think that happens that much. Only because like the interest of it, you know what I mean? There has to be reasons why people are getting into trades or just not going to work, or TA wouldn't be a thing. So this is the prior level, broke bull, held it. All the bulls who went long here got stopped out. All the bulls who went long here stopped out. Order book Dunzo. So this becomes more of an interesting where bears look to potentially get back in. And then where the other aggressive bears get in. So bears got in on this little bear break here. So they piled in aggressive here, I would think. Aggressive here. Aggressive here. Because you see this is probably the super aggressive. And then they protected that level. So this is definitely a big level right there. So it would be anywhere here up to here. Stop would need to go here. What's the other alternative? Daily high or low. Golden pocket. Oh, that's pretty good confluence there, hey? Golden pocket with the moving average on the daily. So you just start getting worried here. I mean, if it's really weak, it won't be able to get past here, the bottom of this range. That's very aggressive. Very aggressive, semi-aggressive, top fishing here. I guess is more it's like scaling it from here to here, maybe. So aggressive, but people scale. I mean, I guess you put this probably there has to be stops above here too. So this seems like the more important level, though. Yeah, I mean, even going back to here. So this is the. Oh yeah, now it makes more sense. Keep on. It's tough when it comes out that's this way, but you have to look at it from like the hourly. So you have this bull break. Here's your axis. Yeah, yeah. And then you come back in. Here's your short down to next support. So that's the trade there. That's aggressive. But you have the bull break. This is weak bulls. You say, okay, weak bulls, boom, getting right back in this range. You have to put your stop above here. So there are stops here for sure. Bulls protect. This is an interesting level. When it gets back to it, it rejects, and then bears getting big follow through here. It's a win for the Bears, man. That's a win for the Bears. So the hourly makes me change my tone a little bit. Where it's like this is actually not the worst place to Bears up now trying to protect this level. You're not even gonna let bulls in at all. But it's tough. It doesn't make sense though, because it is still looking for daily high or low. Yeah, it's kind of like mixed signals, too mixed. I don't know. I'd want to look bull here, but I don't like the way the hourly looks. I don't like that the Bears had this big win here after the Bulls got going here, and now they can't even get over this level here, which is new Bears potentially stepping in here, taking this as their own territory, and doing it in a very convincing way because they're not even letting them inside of it. Like this whole thing can be protected. Like this would be the end of the road up here. And if they get a lower low, then what? Then we come back into here, and it becomes very iffy of what the fuck is going on here. I think if we get back in here, then it might be a spot where a daily lower high would be very lucrative, looking for the monthly consolidation finally. But again, not much there. Silver here, inverse head and shoulders, bull break all the way up to the highs here. Very nice move. All right. Well, let's look at some of these names. I mean, I don't know where to look. Don't know where to look. I did have some other stuff written down. I have. Okay, that's the. Oh, it's bright. So we have lift here. I did end up selling some lift. Well, I sold all of it up here. We're looking for an hourly pullback here or an hourly. I was looking for hourly oversold, but the thing never popped up for whatever reason. I don't know why it didn't fire off the back burner. But the market was weak that day. But this weekly was the level. This was overhead, failed, and I was sort of shocked that the bears didn't try to step in here. Too much power from earnings or whatever. Now we're back to track here at daily higher low, looking to play off of the structure, I'd assume. Daily higher low is definitely most likely scenario. We have pulled back almost 50%, but this is a daily doji candlestick. So indecisiveness coming right here. Potentially a day for bears to bulls to take over. We did have daily oversold, but it didn't really fire for me for whatever fucking reason. Um, were we been able to get anything here? No, just the same thing as the whole market. Here's your pre-market low, bear break into a bull move. Then a back test of the high of day, move up, then it stops people out. So, I mean, it looks relatively like an easy setup, right? Like, I mean, let's see if there's a POC in here somewhere that I can like. So it looks like it's holding the valley area. It kind of got in, dipped in. I would say that this level right here is pretty intriguing. 2250. You have the alternative POC, you have the 50% retracement, which is where the bulls want to hold on a pullback. And then you might be able to get like the EMA 12 kind of swooping up here. The problem I have here is that we have the why we're in, but we don't have the actual trigger of what we're doing and why we're doing that. So like, I mean, is it like something as silly as this where it's like, oh, it's a fucking rising wedge or some shit? Like something I hate doing this because every time I do this, I end up getting myself into like a really fucking poor trade. Whenever I draw these like descending wedges, I always end up in a really poor trade. Most confluence is down here. So maybe because it's not really an hourly high or low scout, just looking for some sort of move. Maybe we get here, you get a bear break, no follow through back test there. Something like that. Get your hourly bounce and then looking for the daily high or low. The only problem is that is I talked about before how, oh, if my the reason I'm getting in the trade is the daily high or low, and then I'm on the hourly, like then my target cannot be on the daily, but it would be. So just running into walls sometimes. Just running into walls, running into walls, running into walls. Cocoon spy not looking great. I'll put an alarm here. I just don't know how to. It's so hard to rinse and repeat because I just feel like trades are never the same. Like I mean, we can come down here and shoot and hit this level here and then bounce, and then I'd be like, oh, I missed it. It's like, but okay, so if I have a level here, you know, I can't put my stop way down below the daily high or low or the beginning of the move. So I have to go to the hourly to look for a level. Hourly is an absolute chop fest. So if I come here, I don't love it. So maybe this is an area of interest, and if it bounces here, then I can get back in here and then put my stop under there. I guess that makes sense. Yeah, I guess that makes more sense. Instead of it being like, okay, I'm going long here. This is the level I'm looking for here. Get the bounce, get going. Nothing worse than that you get the bounce here and then you fail. And like I said, the alternative could be on the 5 minute time frame. You get that little head and shoulders, and then you go up. Then maybe you sell some on the bounce. You get a big bounce, and then you add back here. Hourly high or low. This turns into an inverse head and shoulders type of deal, maybe on the 4 hour. And then you have your daily high or low set, and then you're looking back up here. So aggressive versus conservative, right? You have your level you want to play off of. If you want to be conservative, you wait for the hourly bounce, look for the hourly high or low, play off of that range. If you're looking to be aggressive, price gets here on the hourly. You're looking at the 5 minute time frame. You're looking for a pattern to get back up to there. Okay, there you go. Let's just watch this video over and over again at the 1 hour mark. Okay. All right, let's go back to the indices real fast because they're not looking great. We talked about how if these levels broke here, we would not be confident. We'd want it to be more of a pre-market thing, though, right? Because now it's just a post-market thing, or sorry, an open thing. Because now you could just make a case for like some sort of 4 hour high or low, but I don't know if I'm overthinking this or not. But what I'm seeing is pre-market bears breaking a level of support So they're making it tougher for the Bulls to get anything going here. But from this perspective, it's just hard because it's a daily insight. So it's within a daily range. So there's not much happening there. If we get inside of the daily range, we understand that this little level is a short term important level here. Short term, meaning that it opens, it's an opening to all of this price action to the downside. So if we open here, the question is, where does the Bears want to play off of? Where would the Bears want to play off of here? Based off of right now, I guess it would be the prior day close. So that would be like the most interesting level on the open would be the prior day close. Because it will open on the half an hour. Boy, there's a lot going on through this brain right now. So it depends on where we close on the hourly here, because that's an important level. If the market opens and just shoots down here, there's really nothing I can do about it. I don't want to be that aggressive. The problem is then I go into like the sniper range versus the position range, and everything that I'm told is that when there's a higher volatility, you don't want to be a sniper. You want to be a position player or position, which would mean that my stop would have to go above here with the wiggle room, which would be fucking nuts, dude. Because in my head right now, I'm thinking to myself, we close here, price opens, we come here, we reject off this level here, and we start pulling back. And then I want to get in here and put my stop over here. But with the volatility in the morning, I can easily get stopped out. And the position play would be as long as we don't break the pre-market high from fucking this morning, which is up here at 608.98, then the bears are okay. But that's not true either though, because the reason why I am in the trade is because this level broke and we back tests. So I guess I'd want to see a hit here, a move here, back down, and I want to say to myself, as long as the bulls don't get above this level here, and then I'd be looking for something like the lows here. This would be 2.5 to 1. That's a big fucking range. 1.6%. It's a big fucking range. I mean, again, it would kind of complete this little head, even though it broke here a little bit, but we could just get choppy too for the next 2 days with Nvidia's earnings coming out. Hmm. All right. Well, I'm gonna hop off and try to solidify some things with what exactly I'm trying to accomplish. So we'll see. Have a good one.